Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I say that so much, just it's automatic, guys. Today we're going to talk about stuff on Twitter, a bunch of different information. I'll give you my financial opinions all around it. And it's a lot about banks, commodities, technical analysis patterns, people shorting stuff that they shouldn't be shorting. And I'll give you reasons why, what I don't do anymore that I maybe used to do in terms of trading and stuff like that. But let's dive in there and let's see what we got. And if you want to follow me, it's at @finding_finance. You can also join the website. That's finding-value.com. There it is right there. Become a platinum member if you want to join our community. So we've got Fabi here, and she says, this is why I don't do trade-by-trade tweeting, I guess. She says tweetering, but added additional gold short at 1860, and this guy is just shorting gold and silver. He says, yes, my gold short has been placed this afternoon. Silver also at 20.44. These should continue to drop while the USD does its counter trend move up. Now, I'm not saying that this guy is necessarily wrong in his reasoning, but anything can happen in the short term, guys. You can have a problem in the market where you get a bank failure or something going on that you just don't see, and it just reverses dramatically on you. That's the short term. I don't play the short term. I play the structural, fundamental problems in the market in the long term. Structural problems in oil. There's going to be a problem. Now, the question is the timing. And if you take a long enough time frame, the timing doesn't matter. Because if you've got a 2 or 3 or 4 year time frame, in the short term it's doing this, it doesn't matter. It will come because we have underinvestment in oil and natural gas and energy. And you can see the underinvestment in a lot of different commodities as well with the deficits that are coming. And it may not even be underinvestment. We may just not have good assets to yank out of the ground anywhere close to the prices that we're at. Now here's copper. And this guy says copper will soar over the next few months. And I agree with that. Copper looks really strong here. We've got, and he uses MACD, RSI. I look more at the candlesticks and how these candlesticks are going. I also think copper is pretty resilient, and we're at a high level above a lot of support. So there's support right underneath us. If copper moves on higher, copper and oil generally move somewhat close together. And I think they're going to get more tightly linked as copper becomes more tightly linked with the energy renewable trade. So I do think that copper will move higher. I think oil is going to move higher. In the short term, who knows? Fear can overrun anything. Longer term, 6 months, year, yeah, I think it's going higher. That's my take. And we've got here, Ronnie shows this. This is the federal funds futures curve. This is the different time frames that they are marking here. So this is March 10th. This is March 9th. And you can see over 8th, 9th, 10th, and then the 11th here that the curve is shifting downward. What that is implying is a pivot. That is implying a pivot here as you look at this move lower and lower and lower and lower based off of things that are happening in the market. And what he's saying is it could be a potential pivot by the Federal Reserve and the interest rates pivoting lower. This could have an impact and probably will have an impact on the housing market, on inflation, and also which assets could do well. If this is a pivot and we do go lower, I think gold and silver will be a big benefactor of that. And I also think eventually that oil is going to be a big benefactor as inflation comes roaring back from deficits that are being spent in the interest rates. Then you've got the housing market that could kick back up, and we'll see housing starts probably move on higher. As weird as that sounds, depending on how fast these interest rates go down. So that's something to watch. We've got here, so this is a really important one. I would say I agree with it for the most part here. It says, repeat, economists and financial industry totally clueless about the causes of the banking crisis. And he's talking about the root causes. It says, when the Fed pivots and starts lowering rates and QE, then energy costs push inflation comes back with a vengeance. I agree there. So if they pivot and start lowering rates and doing QE, which is lowering the interest rates, energy cost push inflation will come back. That's where your oil is going to come back. It says world is transitioning to protecting wealth in gold and silver. And this is his kind of rundown. I'll go through it real quick. It says, here's why the energy cliff was a factor that started the bank runs. Peak conventional oil production caused $147 oil prices in 2008. The Fed and central banks did QE and zero interest rates to bring on nearly 12 million barrels per day of U.S. shale oil and natural gas production. This was 80% of global oil growth. Banks loaded up on low interest rate bonds. 2021, we had an energy cliff dynamics pushed inflation to high levels. The Fed increased interest rates to deal with that high inflation, thus destroying significant bond values. A large percentage of banks' collateral, treasuries, bonds, MBS, etc., will become increasingly worthless as the energy cliff comes back to haunt us again. Economists and financial industry will look for financial solutions to an energy cliff predicament, which won't work. Most stocks, bonds, and real estate will lose value in the coming 5 to 10 plus years, forcing investors to protect wealth in precious metals. And what he has completely right here is that if we do have an energy cliff, and what that means is when the energy production, if you look at some of the other videos, you can see that we talk a lot about the energy cliff and how production is going to turn over or go flat. If that happens, you cannot fix anything with financial levers in the market. And if we have a shortage of energy, or we have an energy cliff where it actually goes back down, where some people are projecting that shale oil, which made 80% of global oil growth, if that turns and goes back down, now we've got no growth really in the markets. We could be going lower in oil production. If that happens, that's going to be inflationary. And if it's going to be inflationary, it's going to yank interest rates up and cause problems in the financial markets. It'll cause what we'll say runaway inflation, and then financial entities that own all these low-paying bonds are going to be sitting on a bunch of garbage that will go lower and lower and lower if an energy cliff comes. So I agree with that. We've got probably worth reminding people that the Fed's mandate is to do something about inflation. Propping up crap banks that lend to Ponzi schemes is at best a side hustle. I just thought that was funny. He says Brent Oil would like to remind investors that it does not keep deposits with any of these banks. Says the Fed knows the economy is so fragile that the failure of SVB would cause a financial crisis, so it abandoned its inflation fight and backstopped the banks instead. That proves Powell was lying about both the strength of the U.S. economy and his resolve to fight inflation. And I don't know if he's jumping too close or too quickly to this conclusion. Maybe there was a reason he went after these few banks, and he knew that they were lower. And I know they have ties to crypto and other things. I don't know what the full tie is, but perhaps not. I don't know. It says, seriously, how could anyone think that this wouldn't be bullish? It says this scenario of bank run were literal Armageddon. You really think those in power wouldn't stop it when they can print funny money and laugh at your narratives? The end of the world is the bull case. And what he means by that is these people are talking about all of this deflationary type moves. Oh, we're going to have this crash. We're going to have whatever. If we have a crash, what he is saying is that they're just going to print a bunch of funny money to stop it and laugh at whatever narratives that these people are creating for a bear case. He said the end of the world is the bull case. The end of the world is the bull case for the melt up. The end of the world is a bull case for money printing. I agree with that. It says Dick Bove did an interview on CNBC Asia today. He pointed out that the net worth of the Federal Reserve is minus $1.1 trillion due to the essentially the same funding investing mismatch that took down SVB. So the only way for the Fed to backstop the system is to print money. This is where it all leads to, guys. Print money, print money, print money. What does printing money do? It's inflationary. The threat of deflation will end in inflation. The threat of deflation will cause a reversal in policies, perhaps, or something breaking in the system big enough. It says the good news, mortgages are about to get affordable again. The bad news, home prices looking at 100% gains. I thought that was funny. I do think the housing market could kick back on as mortgage rates start to get lower and the affordability increases. Here's Michael Burry. He says 2000, 2008, 2023. It's always the same. People full of hubris and greed take stupid risks and fail. Money is then printed because it works so well. Yep. Money is then printed. Print, 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 print. Here's some of the, this was earlier in the day. U.S. regional bank stocks were just getting hammered in the beginning of the day. We've got pricing switched from hikes to cuts in 72 hours, signaling small bank stress is enough to derail the macro strength. JP must be considering lessons of 98 right now, when a financial panic drove Fed cuts and extended the tech bubble, except this time the costs are higher. We've got financial stability quote, and look at this. We've got just the 10-year yield, 30-year just dive bombing. They did come back up towards the end of the day, some of them. But yeah, they're dive bombing, I can tell you that. Here is Michael. He said, as of 8 p.m. Pacific time, estimated sales of silver and gold at APMEX were now totaling the second highest day I've ever recorded for both metals. So we are seeing a shift of money into precious metals. And I talked about that on our website too, in our question and answer session. We were talking about, you know, if people can't get money out of the banks, what's the next best thing? Well, let's just transfer all our money into gold and silver. That's an easy way and a way to protect your wealth. So we could see more money run at that if people maintain how afraid they are. Sven says, so they hiked themselves into a banking crisis while peddling a soft landing narrative, forcing them to intervene before they even got to a pause. Once again, the Fed has shown itself to be utterly oblivious to the risks right under its nose. The incompetence is stunning. We also have Buffett here. He says, we have usually made our best purchases when apprehension about some macro event were at a peak. Uncertainty is actually the friend of the buyer of a long-term values. And that's what I'm doing. It's more of a long-term take on it. And I'm buying when there's uncertainty and fear in the markets. The Fed has two options here. He says, hike interests and do QT to combat inflation with a continued deposit flight as a consequence, or you cut interest rates and add liquidity to secure the system while inflation will run too hot. Textbook rock and a hard place dilemma. I agree. It says now the bank run is avoided. We can finally get back to inflation destroying our economy. I just thought that was funny. We've got copper's calling BS on the oil move. Oil was going lower. Copper wasn't really moving lower. Actually, copper ended higher today, and it's calling BS on the move. So I think oil will continue on higher, and it was a false shakeout. Here's a spoiler alert. Individual and companies may well keep capital at regional banks, but shareholders and bondholders won't. There will be a run on the banks by those investors, and it will cripple them. It says this was not a bailout during the GFC. The government injected taxpayer money in the form of preferred stock into banks, et cetera, et cetera. But I'm going to end it there, guys. That's what I've got for today. We're going to talk about, all that stuff. I think this stuff's going to pass. It's going to pass. It's just going to be another thing in the rearview mirror. It's not going to be, I think, a ending event. And if it does continue, yes, the banks could have potential problems. There could be money that runs and moves around. I don't think there's a credit deleveraging event like 2008 where credit actually gets destroyed in gross amounts. Maybe I'm wrong. Maybe I'm wrong. If I'm wrong, put it in the comment section if you guys have any comments about that, about why I'm wrong. But that's what I've got, and that's what I'm seeing in the markets. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. Check out the website if you'd like. Join our community. Love to have you with us, and we can debate and talk about all of these things during those question and answer sessions. The next one is 7 a.m. Saturday, Mountain Standard Time. That's coming up. We'll see you there, and we'll catch you next time. This is Finding Value.